Hello everyone, welcome to another episode of the Trading Prophets. Every episode we are joined by financial experts. If you find this insightful, please subscribe for more.
I'm feeling low again. They said out to them, they don't wanna let it go. Oh, I'm feeling low again. They said out to them, they don't wanna let it go. 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 They don't wanna let it go.
Welcome to another episode of the Trading for Profits. Every episode we bring financial aspects. I'm Forbes. So today let's look at the market. So when we look at Bitcoin is trading at around 66,500 US dollars. And when we look at gold is currently trading at 5,290 USD dollars. And when we look at silver is trading at $84.95. Okay, today I'm with a guest who's Rony Vogel. So Rony has been around in this industry for more than 3 decades. He's an electrical engineer by profession. He turned to capital markets leader. He is also a licensed pilot and international DJ. He's also the CEO of the Vogel Family Office. He's also a self-subscribed Bitcoin ambassador. When we look at it, he's also focused on the role of transforming Bitcoin into a global monetary system. Hello, Rony. How are you today?
I'm very well, thank you. Thank you very much for taking time.
Thank you so much. So first of all, let's start off with your path. You studied electrical engineering. What about capital markets that captured your attention during that time?
Being an engineer at the time or about to become an engineer, I was always interested in innovation.
Okay.
So as an engineer, you try to solve problems which haven't been there before. And by that, you automatically, intrinsically look for what's the next big thing. So looking out there, I was looking as well to the capital markets because obviously some companies have already raised enough capital and have grown to a certain size to be listed on, for example, Frankfurt Stock Exchange.
Yes.
So at that time, I became very much interested in the capital markets and see how that works.
Very interesting. So we also found out, throughout our digging, that you were also founded your own investment club as a student. Can you tell me more about that?
Correct, and then of course, once you look at the capital markets, you try to think, how can I actually be part of it? And as a student at that time, I wasn't really financially that solvent.
Okay.
So what we did is we pooled the money of my fellow students, who have also had some interest in innovation. And we set up a first fund. And that fund was called the Stuttgarter Investment Club, at the time, which is like 40 years ago, by the way. It's a really long time ago. I was just 20 years old. I'm 60 now today. And we started to invest in companies who are about to go public. Companies who were not public, because so-called pre-IPO.
Okay.
And so what we did is, we approached those companies, talked to the CEOs, listen, we are an investment club, we would like to be part of your investment story. How can we be part of it, So, and normally what happens is before a company goes public, they do a so-called pre-IPO round. So they opened their shareholder base basically for new investors. So we bought shares before those companies went public.
Quite interesting. So we saw that you are a man of many hats. You're a pilot, you're a DJ, you're an engineer. So how did those different hats shape your investment strategy? I'll say so.
Over time, what inspired me is different things. I started with innovation. Then I went pretty early. I came across the internet. So you might remember the beginning of the 90s. You might not remember. You're a little bit younger than me.
Yes.
The internet has emerged. And I remember when I got my first email. Suddenly it ended up on my desktop computer at the company I was working with. Was my first job, by the way. And so, "Ooh, what's that?" It was called electronic text mail or something. It wasn't even called email. But then I was diving deeper. How does that work? Before, we used a fax machine, even telex or even classic mail, and suddenly somebody in the United States was able to write me a long message with an attachment, and it arrived at my computer in a second. That somehow made me think, wow, there's a big revolution about to happen. So on what protocol, being an engineer, having programmed myself at the time, on what protocol was that running,
Okay.
So TCP/IP was the protocol layer, is still the protocol layer of the internet as we know it of today. There's many layers on top. And also the internet protocol was running on top of the email protocol was running on top of the internet protocol. And that innovation impacted me so strongly that I left my previous job and went into a startup, and that startup was called AdNet. That AdNet startup, the purpose of it was to bring internet to everybody, not through a computer. We bring it through a little device, which was later on something like an iPad. Yeah. So it was not that iPad, but it was from the philosophy point of view, it was something like an iPad. On that iPad already, and that's why it's kind of interesting for the story we discussed later on, we were putting apps in. We had partners, we had banks on it, online banks. Those online banks were interacting with our device with cryptography. That cryptography, a pretty similar cryptography, went also later on into Bitcoin.
Okay.
So I became interested in cryptography, in software, in internet. So, the first couple of puzzles were coming together for something which happened then later.
Was this all during that time whereby you were still a student?
Sorry?
Was this all throughout the time whereby you were still a student?
No, that was actually my first job.
Or after your
I
first
studied
job?
electrical engineering.
Yes.
Then I did an MBA, which is a Master of Business Administration. Then I started for an American company, and they sent me to Eastern Europe as a project manager to acquire companies. During that time, I still had the investment club. I still, was doing all the other things. And then, the emerging of the internet happened during my first job.
So can you walk us through to the journey? You're quite an OG. So you've been there before, like the whole email internet thing happened. So in terms of the journey, like I'm talking about from barter to Bitcoin.
Yeah.
Can you tell me about the journey, like what each era was trying to solve?
I mean, talking about what money is and what money was in the
Yes,
let's
I
go
can
through
do
the
that.
history of money a little bit.
Yes.
Elaborate on that. I mean, money should be the best store of value. It should be a medium of exchange, and should be a unit of account we both agree on. So that should be money. And many different periods in history tried to come up with some sort of solution for that kind of problem. And we had so many different stories. You heard the stories of seashells,
Yes, I
where
heard.
people were bartering with seashells, That worked locally because those communities in that area knew those seashells are very rare. But the moment, the neighboring island came with a big sack of seashells because they had more of them, inflation started.
So inflation was around even then. Okay.
Even already then at that
Okay.
time, exactly. So, and the same thing happened with people came up with silver coins. Silver coins and bronze coins were used during the Romans and the Greeks. They used all those coins. But then the ruler, suddenly thought, let me conquer the neighboring country, but in order to pay for my weapons and for my people, I need money. So what they started doing is they were clipping the
Yes.
silver coins and the bronze coins and made new coins out of it. Also inflation happened, And then we had so many other things. We had in Tahiti, there was a small island. They worked with stones. They created stones with holes in it. And they knew in order to make a hole in the stone, it's like 1,000 years ago, it takes a long time. So they had a few of those stones with holes in it. But then the neighboring island also discovered a new tool to make the holes much quicker. Inflation started again, you know. So, and we had so many examples, even during the times when we used gold as money, because gold is probably today still the scarcest metal we have, which has only an inflation of 1 to 2%. But even in the gold area, they did the same thing, you know. They were altering gold. They put some other, you know, metal into the gold. They were melting it, made new gold coins out of it. Inflation started again. So up until today, all those different monetary and societal forms, they were all ending up in inflation, all of them. And it's, since 2,000 years, it's always the same story. And why is it? The ruler, the king, you know, the political party, or the president, or whoever, they come at some stage into a situation where they have overspent, or where they want to actually do something which they didn't plan for. And then they say, listen, let me do this one-time change of the monetary supply. I change the amount of coins. I change the amount of stones. I change the amount of seashells. I change the amount of, you know, whatever, tulips even we had at some stage. In order to make war, in order to pay for those people, in order to bribe somebody, in order to do different things. So in the moment they started the expansion of monetary supply, the problem started. And they never reversed it. Not one country, not that I'm aware of, ever have solved that problem later on again. The moment you start the inflation route, the problem is already out there. It's like something, you know, you try to bring the toothpaste back into the tube.
Okay.
Meaning when you squeeze too much money out into the society, too much, inflation starts. And that, you know, that you can never solve again. And let's maybe elaborate on for a moment on what inflation actually is. Once again, you know, inflation is when you print more money than a community, a society, a country produces in terms of goods and services. For example, you know, South Africa produces maybe a growth per year with 2%, 3% of GDP, gross domestic products. And if South Africa is printing 5% of money, the monetary supply is 5% in increasing, you have 3% inflation ending up at everybody's, you know, wallets.
Okay.
So that's how inflation works. The moment you expand the monetary supply faster, then the country is growing in terms of goods and services. And that counts as well to smaller communities, not only to countries. It counts for Europe, it counts for the United States, it counts for everybody who has a monetary system. So, yeah. And we're living now in a world where inflation is prevailing. Inflation is everywhere. We have countries like Nigeria, 60% inflation, Egypt, 60% inflation, Iran, we know with all those problems they're having at the moment, the currency completely collapsed, you know. Turkey, 50% inflation, Venezuela, currency collapsed, many, many more of those examples. So, you know, in those countries, people start to look for alternatives because they don't trust their own currency anymore. They don't trust their own governments anymore. They don't trust their own central banks anymore. They start to, you know, try to become self-sovereign. Maybe I should take responsibility for my own life and look for an alternative form to store my life value, which is money. And here we are. What could that be? We talk about Bitcoin, we talk about gold, we talk about silver, we talk about commodities. And of course you have got a couple of more questions, you know, but you see we're getting into this whole topic probably deeper with more of your questions.
Quite interesting. Because you're mentioning that inflation is caused by the government or, I say, the leaders printing more money. So how is money created? Sorry to get out of context. Like, how is money created? Because we do understand that it's printed.
Yeah. Where's money coming from? How is money created?
Yes.
This is a very good question. I love that question. You know, I mean, I asked the same question when I was 13 years old, and I asked the same question every time, ever since. And if you knew that money is basically credit-based, meaning there's a central authority which is called central bank, and they're issuing money out of nothing. So they're issuing basically a credit to the banking system, and that banking system is lending out the money to everybody, to you if you want to buy an apartment, to a company, to government. So we have a credit-based system. We used to have a so-called, hard money system where gold was sitting in the vaults of the central banks, backing up that credit.
Okay.
That was the time when between 1944 and 1971 in the United States, when we had still the Bretton Woods Agreement, where a lot of gold around the world was sitting in Fort Knox in the United States and backing the US dollar. 1971, Richard Nixon, because he was in that Vietnam War kind of situation, he cancelled the Bretton Woods Agreement, meaning there was no connection to one US dollar is 34 dollars of an ounce, basically. So he basically cancelled the pegging of the US dollar to the gold. And that's where the problem starts. That's where the fiat money system got born or reborn again. It was before there already. And interesting enough, the whole world thought, oh, that's a good system because we can print money without having gold in our central bank reserves. And that's what you see. Countries still have partially gold sitting in their vaults in order to, back part of their money, but it's a fractional reserve banking, they call it. Fractional reserve banking meaning you not have a one-to-one backing with gold in your central bank. And this is a problem because it almost invites governments to print themselves out of any problem they've created themselves. Overspending, creating wars, fraudulent behavior, maybe investing in things they shouldn't invest, spending more basically than their income is. With a government, in essence, their income stream comes from the taxpayer, most of it. Maybe sometimes they're selling state-owned properties, which South Africa is about to do, but most of it comes from tax. But if the tax income stream is not high enough, governments tend to say, listen, central bank, lend me some extra money in order to do this and that. That money might never be paid back. That money comes from printing more money, as we said before, credit-based system. So the volume of money increases more and more, but the underlying economical power of the country doesn't expand with the monetary supply. And that's where the problem is. This is inflation.
That's quite insightful. So what we're currently seeing now, as you mentioned, like we're seeing it in Nigeria, we're seeing it in Egypt, they have like high inflation. But now they've been trying to combat inflation by using Bitcoin and other alternatives.
Yeah.
So in terms of like the capital inflow, so how do we solve the knowledge gap for the people that want to use this currency?
Yeah. Very good question as well. I mean, in those countries, normal people come under pressure. They come under pressure because they know the bread next week is already, 5%, 10% more expensive than this week. So they're starting to look for solutions. And of course, as Bitcoin lives in the internet, it's internet money.
Yes.
It's available to everybody. You only have to install a wallet on your phone, and then you can start buying Bitcoin by just, sending money to an exchange, and that exchange buys the money for you, and you can actually transfer that Bitcoin to your wallet. So you become more and more self-sovereign. And interesting enough, those countries hit the most are the early adopter of Bitcoin.
Interesting, yes.
Early adopter of Bitcoin as well, like Bolivia, for example, like high inflation country, highest adopter of stable coins and Bitcoin. And
Argentina.
Yeah.
Yes, okay, you go.
And of course, the knowledge gap is sometimes there, but it's actually not so difficult to conquer. There's a lot of information out there. If you go on YouTube and on AI, these days everybody has AI and YouTube, you know, you can ask all sorts of questions and you get most of the time pretty smart answers, you know. So the possibility to self-educate yourself, even though if you're not coming from whatever a highly educated, whatever financial, you know, university institution, doesn't even matter. I would even go on the contrary. We live in a time where universities and colleges are not so important anymore, because AI and, you know, and YouTube and all those other, you know, potential knowledge bases will replace the current educational system, also our schooling system, if those institutions are not upgrading themselves to the AI world. So I believe, you know, what we are doing here today is something very important, you know, to inspire people that you can start small, you know, nothing is small enough. You can start with R1, with 100 Rand a month, you know, saving plans, dollar cost averaging. Basically, I have 100 Rand per month. This is my saving, what I have. I send it to an exchange like Luno or Walla in South Africa. You know, there's many others, license exchanges. And I just buy every month at the same day, I just buy every month. This is my savings plan. And I might skip other saving plans. You know, some people have a lot of strange saving plans these days, you know, they save for funerals and stuff like that, you know, which is important. I know it's expensive. But, you know, I mean, thinking of where do you spend your money, maybe on the weekend you have one BLS, you know. We have beautiful examples from circular economies in South Africa and also in Kenya. For example, Bitcoin Ikasi, Bitcoin Kailishta, Bitcoin Witsense, then in Kenya, Bitcoin Kibera. All those communities, they starting to live more and more on a Bitcoin standard. They get paid in Bitcoin, they spend their Bitcoin, they save in Bitcoin. And and I've been there recently to Mossel Bay, to Bitcoin Ikasi. I interviewed actually I would say the manager of that community, and I asked him, the last 3 years, you know, since you introduced Bitcoin, what changed in your community? And he told me, look out for yourself. How does it look? I said, well, it looks very clean. People are friendly, they're open-minded, you know, like I don't see anybody begging on the street. Yeah, exactly. It becomes healthy, less crime, you know, students go to school, people go work, and they save. So when you save into something which is increasing over time, Bitcoin is volatile in price, but over time increasing, volatile to the upwards. You rather save than you spend your weekend into some kind of difficult things, you know, where you might, you know, not serve your community. So there's many beautiful examples where Bitcoin leads to more health, to less crime, to more healthy families, healthy communities, you know. Just the mere fact that people have hope. Bitcoin is hope, you know, because you look to the future, your time preference changes. When you have hope, you have a long time preference.
Yes.
You're not trying to satisfy some short-term needs.
You're thinking long-term rather than just some short gratification.
Yeah.
Quite interesting. Especially like in terms of the Bitcoinicas, all of these communities, they play quite a crucial role. Because if you can look even at the media doesn't necessarily go into the communities. What are people really doing? They're focusing more on the speculative side of things.
Correct.
Not on the actual, how is it really changing lives?
Yes.
It's quite an interesting view.
It is an interesting view, and if I may comment on that, the people who write about Bitcoin, most of them didn't do the necessary, they say 100 hours of study.
Yes.
You know. So plus minus, of course. But it's more like Bitcoin is to a certain degree, you know, Bitcoin is proof of work. We come to that later on. How is Bitcoin coming into the world? But this is proof of work system. But it's also proof of work. How much are you willing to study Bitcoin? If you start studying Bitcoin, and if you invest those 100 hours plus into the Bitcoin ecosystem, you know, like what we're doing now, asking all those questions, you know, go deeper and deeper into the rabbit hole, as Bitcoiners say, you understand what it is, you know, and then you're asking also the right questions. Those people from the media, they don't have time, or they don't want to invest the time of 100 hours to ask the right questions. So they're actually clinging more to the price and to the volatility and to the speculative side.
Yes.
They're not going into the properties. What is Bitcoin actually, What is it really? Bitcoin is freedom money, obviously, It's permissionless. Everybody has access to it. It's scarce, 21 million coins. There will never be more coins than that. Today we have 20 million in circulation. And it's secure. It can't be corrupted. Nobody can change it. It's an open protocol running internet 24/7, 365 days since 17 years. Nobody can change and tamper with it. So when you have a Bitcoin, nobody can take that Bitcoin from you if they don't get your passphrase, which is the password basically. So when you have your passphrase in your mind or on a little cold wallet, which is a USB stick, you can actually leave the country like the people in Iran and other countries and start all over again in another country.
Yes.
Nobody can confiscate anything from you on the border because you have it in your mind. Try to leave the country with gold in your bag. Not so easy.
Because we also seen people using like other alternative like USDT, and they got frozen by the government.
USDT serves at the moment a very interesting, a very important challenge, meaning you can make payments cross-border, frictionless, for low cost, in a split of a second, but most of them are US dollar nominated. You're still sitting in the US dollar system. You're still exposed of, the banking risk, meaning it can be stopped, it can be sanctioned, maybe the payment is not going through. You still have some sort of risk. But it's living in the digital world. It's blockchain-based money. In that sense, to a certain degree, money only from an exchange point of view, not from a store value point of view. And that's why people use it a lot. But the people who use stable coins also think of, maybe there's Bitcoin. Bitcoin is the best store of value long term. So when you receive stable coins, I see a big portion of that, of that money goes into Bitcoin for the long-term saving. So at this stage, we're living in both worlds, stable coins for immediate payments and Bitcoin as a store of value. But to add on that, Bitcoin has also the Lightning Network. The Lightning Network is very important to mention because it lives on top of Bitcoin, which is Bitcoin native, and it's also a payment rails. It's also, you can pay, by the way, in South Africa you can pay with Lightning, with different wallets like Blink and Phoenix and so forth. At 700,000 merchants you can pay. Pick and Pay, Bootlegger, Vida Cafe, travel agencies, yoga studios, gas stations. You can pay with Lightning, basically you pay with Bitcoin, and that's something which should also be more promoted, should be more made aware of.
Yes, because usually there's this thing that to send Bitcoin transaction is expensive. 10 minutes, all of those expensive costs, but with the Bitcoin Lightning thing, it kind of solves that whole problem.
Correct. That's why, Bitcoin is slow for good reasons and expensive for good reasons, because it's secure.
Yes, secure.
It's like, it's like an elephant. It's a very strong elephant, is strong. It's also sometimes a bit more, step by step. We say, tick-tock, next block. Every 10 minutes, there's a new block mined. The mining process, is basically a solving of some kind of a mathematical puzzle. When it's solved, that miner who actually solved the problem gets the reward. And that reward at this stage means 3.125 Bitcoin for solving that puzzle. So, and that's how new Bitcoin come into circulation. Every 10 minutes, 3.125.
So in terms of the global monetary system, who controls it, and why should the average person be concerned about that?
We elaborated on it a little bit at the beginning.
Yes.
The monetary system. Look at 4 different jurisdictions. Let's start with the United States. The United States, the Federal Reserve Bank, who sits on top of the monetary supply. Probably most people have heard that name. It's quite well known. and that is owned by 12 different local Federal Reserve banks in the United States. And those local Federal Reserve banks are owned by individuals and by banks. They have per se the responsibility for the monetary supply of the US dollar in the world. It's a sort of semi-private, corporation, and the governor of the Federal Reserve Bank, together with their board, they decide what's the interest rate, how much money gets into circulation, how much money gets provided to the banks, what are the interbanking interest rates, and all of that. In Europe, we have the European Central Bank. This is owned by 27 different central banks of all the European countries. And in China, you have the People's Bank of China, which is the central bank of China, which is very close to China's state, to the authorities, basically a state bank. They're issuing the yuan, And in South Africa, we have, South African Reserve Bank, which is owned by 800 different, institutions and individuals as well. Also Standard Bank and Nedbank, they're all sitting in there. So it's different in each country, but it's a few, of those reserve banks around the world who are responsible how much money is in circulation and what are the interest rate on the money and what we can do with the money. In terms of South Africa, that you cannot really send easily South African rand into other countries. I mean, to a bigger volume, small volumes, yes, but it's not fully convertible with all currencies in the world. So there is a restriction on it. What we want that's why we call it freedom money. Bitcoin gives you freedom. Nobody sits in between. We don't want a middleman. We don't want an authority, deciding whether you can make this transaction or not, whether this transaction gets, permitted or whether it takes 1 week, 2 weeks, or 1 second, So we're coming from a world last century where legacy capital markets and financial institutions and reserve bank, they're living in the old world. This old world is about to end because we're living now in a digital age, internet and AI, high-speed data computing, everything is interconnected. There is absolutely no reason why I should not be able to pay you for whatever, a high amount in 1 second for no cost. That's how the world should be.
Yes.
What we see is those institutions, they all, to a certain degree, I would call it politely, have respect of what stablecoins and bitcoins are, and Lightning as well, and try to sort of regulate it and try to control it. And here we should be very much alert as people to not allow that self-sovereignty. That's what it's all about eventually. Bitcoin gives you self-sovereignty about your life energy, because money is stored life energy, right? So you work hard, you save it in money, and you want to actually ideally pass it on to the next 100 generations. You don't want to have it exposed to inflation and maybe taxation, and taxation is a big topic. Let's leave that out. No financial advice, by the way, on that side here. And so coming to something back, we are humans, and humans in essence want to be free. We want to be free in many respects. The way we work, the way we live, the way we love, the way we are expressing ourselves, but also want to be free in the way we store our life, which is the money. And that money should be free from corruption, free from interference from any central organization, and it should be sitting natively in the internet, and it should be transportable over borders and over time.
What I've always found it quite interesting is the whole thing about Bitcoin is that it's all on the blockchain. Anyone can see it. So unlike banks, most of the things are like privately.
Yeah.
You can't necessarily prevent. It's more of a trust basis thing, which also draws back with what we were talking back on earlier, the whole Iran thing. So isn't that quite interesting that whenever there's a financial crisis or the country is about to collapse, people tend to come into Bitcoin. They start to realize that they can't trust their government anymore.
Yes.
It's more as if the whole monetary system basically works on the element of trust, if the trust is gone, people without even knowing the fundamentals of Bitcoin, they're going there.
Correct. You touched on something very important, you know. Bitcoin is trustless.
Yes.
And it's difficult to get your head around. What means trustless, you know? We're so used as humans to trust. We have to trust the banks, we have to trust authorities and companies, you know, you have to trust everything. Bitcoin is perfect in itself. The protocol is absolutely perfect the way it's designed. You don't need to trust. You can verify. You can verify because the blocks are open. Any transaction can be verified on the blocks.
Yes.
If you open Block Explorer, for example, you see the transactions coming in and out, you know. Every block, like 4,000 or 5,000 transactions in average. So it's a trusted system because it's completely open and transparent. That's why some of those FUDs, you know, FUD narratives which are out there, Bitcoin is like for criminals, you know, we hear all those stories.
Yes.
It's nonsense because you open the Block Explorer, you see where the money comes from, where it's going. So,
In fact, that's quite counterintuitive because by saying that Bitcoin is for criminals and you can't stop fraud, it's quite the opposite because you can actually stop. There are companies that do that. You can actually prevent fraud because it's all in the blockchain. You can all see.
yes, correct.
So you already talked on hard money. What is hard money? Can you please break it down in terms of like your own view, your own opinion on like what is really hard money?
I mean, we had periods in history where we had hard money when the currency was like 1-to-1 pegged to gold. And we had it recently in last century between 1944 and 1971. That was a hard money time. And when you see how societies developed during that time, it was a very healthy period for humanity, you know, at least in the Western world, because that's where I can actually see it a bit more clearer. And then since 1971, the money expansion really lifted off, you know. More and more money got printed, more and more problems arose from that. And we know what's happening with the feeling, oh wow, my money is slipping, rinsing through my fingers. You know that feeling? That 100 Rand 5 years ago was something.
It was something.
Now 100 Rand is not even 2 coffees, you know. So, you know, 100 Rand was a meal. Remember, 5 years ago? It's not anymore. A meal is double. So with that feeling, you know, can stop and should stop. But the only hard money I know of these times is Bitcoin. And Bitcoin is hard money because it's capped to 21 million coins, and that is it. You know, it's written in code, it's in the protocol, nobody can change it. 21 million coins forever. So the moment we start to adopt Bitcoin as you know, countries, as societies, as people, we will experience an increase in value in Bitcoin because Bitcoin is scarce. It's 21 million. So we got more participants because we see a migration from the people in Nigeria, in Iran, in Venezuela. They go into the dollar because they want to get out of their currency. Let's go into the dollar. They go out from the dollar. They might go into stable coins, and they might also go into gold. You know, we see the gold price, silver price, copper price rising because also of that. But not only of that, because also the central banks around the world, they're buying more gold and selling US dollar treasuries. So they're converting dollar, which is getting weaker and weaker, into gold. And for the central banks around the world, it makes sense. But for people, it doesn't make sense. For you and me, it doesn't make sense to buy gold because you have to store it somewhere. Where does it sit? You know, you cannot divide it, you cannot cut it, you know, you cannot do anything with it, you know. So for some authority, it makes sense. But for us, it doesn't make sense. But for us, it makes sense to start buying Bitcoin. And now you see a migration from very weak currencies to medium weak currencies to stronger currencies to gold to stable coins, and we see eventually everything migrating to Bitcoin. And this is happening slowly, but then suddenly. What I mean with it, we're in the slowly period at the moment. We're doing education. People start to think about it. What does it mean? They're asking questions. They didn't buy anything yet. Those discussions which we are having at the moment, I had just recently in Frankfurt, I was talking in front of 300 people, private banks, family offices, almost none of them had Bitcoin, but they were like interested. They're asking questions. How can I, put my foot in the water? How can I tap my foot in the water and start doing something? What's the first step? How shall I get into the ecosystem? Send me information, I had today 2 calls with family offices here, asking all those questions, similar questions like you were raising. And I see there's a high likelihood that more and more market participants, private individuals, family offices, maybe asset managers, start buying Bitcoin because they don't trust the old system anymore. And they want to have something next to gold and next to tech stocks and next to real estate and next to art, whatever they all do, collecting. And my personal take on that is we are in this slowly then suddenly phase, pretty much at the end, I would say another maybe a couple of months of sideways, which means the coil is compressing and at some stage the coil just opens, and then it goes suddenly. Because of all those people, or some of those people I'm talking to at the moment, and a lot of my podcast friends talking to, in the United States, in South America, and they're talking to many of them. I was in Abu Dhabi at a Bitcoin conference 3 months ago, and the head of the Abu Dhabi State Sovereign Wealth Fund was talking to the Bitcoiners. Why was he there? Why was he there? Because also those people in the Emirates, in Abu Dhabi, in Dubai, they're sitting on a lot of, financial possibilities. They're also investigating. So now picture, they are investigating, we're investigating, your friends are investigating, family office investigating. Then slowly they're starting to do an allocation, and then the price will rise again, and we pretty quickly see a complete different area. The moment we see that, FOMO kicks in, and a lot of those people who have not allocated start allocating, and then everybody talks about it as a new big thing. And then we're in a complete different scenario. The capping of 21 million. What does 21 million mean? Look at the world population. We are 8 billion people. 21 million coins. Do the math.
Sooner or later, it will be survival of the fittest.
Yeah. So, yeah.
Yeah, I wanted to bring it back to your family office.
Yes.
Because you have made a bold move of taking Bitcoin. So, what conviction made you to actually build, to say, oh, now we are transitioning to Bitcoin?
Yeah. It's good to go back into the history of our family.
Yes, let's go back there.
We are a German family.
Yes.
You can hear that, yeah. And we come from Silesia, East Silesia, which is today Poland. And during the First World War, my whole family lost everything because, I'm not sure how much you know about history, but where Poland is today, that was before Germany, and then Germany lost the war, and my family lost all their properties, all that, everything what they had. We had huge land, we had hotels, we had agriculture, and so forth. So my family got expropriated by losing the war because we got pushed out of that land into the sort of more western part of Germany. We built up again some wealth, and then the Weimar Republic came. Weimar Republic, a lot of people know as high inflation time. That was the time between the First World War and before the Hitler regime started, so the very dark area of German's history. And the hyperinflation eradicated all our wealth again. So we are hit by, expropriating our property. We hit by inflation. Then the Second World War started. family again started after the Second World War. We had two currencies, the D-Mark, which was in the Western Germany, and we had the Eastern German mark. And we were living in the Eastern German area, and that currency got highly inflated. So even though we were building, we were losing the whole time. Inflation hit us again. Then the reunification came, East and West, Berlin Wall came down, both countries came together. And at that time, we were hoping that the injustice which happened to my family, which was expropriation, would have been rectified. It didn't happen. So mentally, we lost everything again. So our family, in short, we are a family of expropriation, inflation, entrepreneurship, building up, losing up everything, up and down and up and down. So me being, the sort of the technical entrepreneur head of the family, I was constantly looking, how can this be avoided for future generations? So I went into gold early. I'm a big gold bug. I love gold because of that. It preserves value for a long time. And 2008, we had the Lehman crisis, the big financial crash in the United States.
Yes.
You might remember that
Remember
one.
it.
Yeah. And soon after, January 2009, the Bitcoin protocol got launched. First block got mined. I didn't even realize it immediately, but 4 years later, I came across Bitcoin. So, oh wow, it's solving all the questions I was always having, about, creating generational wealth, having 100%, being 100% in possession of your ownership, all of that. So the beginning was starting in a little bit like, I bought some, I sold some, I bought some, I didn't do the 100 hours of study,
That's
So, but over time, the conviction built. And only the last 5 years, I started selling all the other activities which we have in the family, real estate, tech investments, companies, We didn't talk about that too much, but it's not so important for today. But we converted over time, part of our wealth into Bitcoin. We even sold our gold a year ago and bought Bitcoin for that. And the goal is to be 100% Bitcoin only. We're keeping only a few properties, but everything else, like tech companies, and other assets which we have, gets converted into Bitcoin. And the conviction is obviously very high. And why is it so high? Why am I putting my family at risk? Some people would ask, No, it's no risk. If you see the properties of Bitcoin and you believe Bitcoin is not going to zero, it must go to 1 million, to 10 million, to 100 million. This is the conviction you have. There is no in between. We can debate about the timing. That can be debatable, but not where it's going to go. If you believe in the protocol, if you believe in the qualities of Bitcoin, and you're not believing it's going to zero, it's going to go in the other direction.
what even struck me right now when I was listening to you is that you mentioning all of the things that are currently the problem within our monetary system, like through your family office story. Because I'm realizing that, like during the times whereby there's, let's say, a war, we can't control. There's something that we can't control. Wars, all of these things, and you own like some assets, all of these assets. Basically, you start to learn that you don't necessarily own all of these things. You don't even own like the money
Correct.
in the bank. You start to realize all of these things that, oh, damn.
Yeah.
Then through your lessons that you had to take the risk upon again and start all over again. But the difference with Bitcoin now, you don't have to start all over again. You still have your Bitcoin.
Correct.
So, for my view, it's quite an interesting perspective to go from that risk. Now it's kind of like doing a risk management right now, because you're mitigating the risk by using Bitcoin.
Yeah.
You know that quite interesting.
That's maybe I can elaborate further on that, because
Please do that.
I mean, risk management, yes, but also I think it's kind of important to also have a view, where are we going from here
Okay.
as society, also from a technology point of view. If you start looking into AI, in agentic AI, and if we for a second accept that AI will build real worlds, AI in connection with robotics will start building something, real world assets. How does AI build something in the real world with robotics without a monetary system? And what monetary system is AI going to use to pay their suppliers, to pay for data storage, for processing power, for all of what they need? Because if they build something, who is paying what is being built? AI is not opening a bank account with Standard Bank. They're not going there and writing papers. Because AI knows, I don't want to be exposed with money which is inflating. AI knows exactly what is the hardest money of the world. AI will work in the triangle between stablecoins, Lightning, and Bitcoin. I'm pretty sure. And if this is going to happen, and we have seen the last 3.5 years how AI has changed this world. And that it's going exponential. It's not going linear.
It's going
So
exponential.
in 10 years' time, we will be surrounded by millions of AI agents, thousands of robots doing things for us. And they paying each other with what? With South African rands, or with Bolivian boliviera, or with Egyptian dollar? Probably not.
Definitely not.
Are they using US dollar? Probably not. Because they will evaluate everything what is happening in the United States. They will evaluate everything what's happening in Europe. They will also evaluate everything what is happening in China. So they definitely want to have the hardest money of the world and the most neutral money of the world. Neutral, it's very important. They don't want political money. Because most money is political.
Can you emphasize more on like the AGI, this new type of AI? Because a lot of people might know the previous version, like the generative AIs, all of these things.
Yeah.
Can you
correct.
elaborate more on the AGI?
That's what we're talking about, singularity moments, yeah.
Okay.
So this is something very interesting to observe. And when do you get onto Bitcoin? People ask me often, what's a good time to enter Bitcoin? I told them 17 years ago. What's the second best time? Today.
Now. Yeah. Now I just wanted to like a quick follow up, like in terms of the traditional family office.
Yeah.
So the traditional family office are still on the fence in terms of Bitcoin. So what can you say to them?
I mean, traditional family offices,
Yes.
like
Still not yet on the decentralized finance. They're
Yeah.
more traditional real estate.
Yes.
They don't banking, not even digital.
I would suggest buy some and start to learn, start to ask questions, be critical, go to a conference, listen to podcasts, read a couple of very interesting books about the monetary system, educate yourself, but have some already. Even though the conviction is not 100% there yet, but the moment you buy, it's like you are part of an ecosystem.
Yes.
And you're part of an energy system. You're part of the information. You're part of a movement, And then you see it from there. If it's not for you, it's low risk. You can always sell it. It's tradable 24/7, 365 days, It's the highest tradable asset in the world. It's traded between 20 and 120 billion US dollar per day. So it's very easy to sell your investment again as a family office. But start slow, study, have maybe somebody in your family office who dives a bit deeper, maybe allocate one person who studies the 100-hour plus.
Okay.
Yeah, that I would suggest, yeah.
We're also seeing like the institutions as well. they have integrated the Bitcoin ETFs, like the IBIT, which is one of the most traded ETFs. So we're going somewhere.
I mean, to be honest,
What do you think, yeah?
as somebody who is Bitcoin only,
Okay.
I'm not a fan of so-called paper Bitcoin.
Yes.
Or wrap Bitcoin, because we talked about the Bitcoin narrative.
Okay.
If you buy an IBIT,
Yes.
it's easy to buy. It sits in your portfolio, and you can see it in your. It's basically a correlation 1-to-1 of the Bitcoin price, but you're not owning Bitcoin. The IBIT is a little bit different because you have the right to actually deliver the Bitcoin to you. So if you tell IBIT, listen, I want the Bitcoin on my wallet, they send it to you, which is a promise they probably fulfill as well. I think so. But rather go for Bitcoin only. Because Bitcoin has all those properties. Bitcoin is condensed energy, proof of work. We talked about how Bitcoin comes into the world. So a lot of energy is needed for the mining process. So all that energy sits in that one Bitcoin. But you need to have this Bitcoin in your cold storage, in your vault, in your possession, in order to have all the Bitcoin properties available to you.
So why do you think these banks are offering the IBIT instead of offering the real tangible Bitcoin?
With IBIT, they make commission. If the banks would promote Bitcoin, they wouldn't make much commission because you don't actually need the banks. You can buy Bitcoin. I can buy Bitcoin from you,
Yes.
and you from me, peer-to-peer with no cost. Or you buy it from a licensed exchange, like in South Africa, Luno and Vala, also with minimal costs. But you don't need banks. You can also spend your Bitcoin and live off your Bitcoin. You don't need a bank account anymore. Banks, they need to learn how to incorporate Bitcoin. They try to put financial products on top of Bitcoin and selling it to their clients in order to stay in the game.
That's yes.
They need to stay in the game, But as a Bitcoiner, you don't need banks over time. You need maybe somebody who allows you to put Bitcoin as collateral, pristine collateral, into their custody, and then they issue a loan, fiat loan, meaning rands, dollar, euros. So you're spending the weak currency and keeping the strong currency. That's something which makes sense.
Yes.
But the classic banks, at least in Europe and in South Africa, are not doing this yet. In the United States, they're starting to do that now. I think 8 of the 10 biggest banks in the United States offering Bitcoin lending products based on your Bitcoin.
Oh.
But still, you have to hand over the Bitcoin to them in order to get a loan based on your Bitcoin.
To them. That's the problem.
So it's something, it's questionable.
It's good, yeah.
Yeah. So I advise to have Bitcoin spot, Bitcoin pure only
Yes.
on your cold storage.
Very interesting. So what are the biggest misconceptions you have heard about Bitcoin?
Misconceptions?
Yes.
Oh, yeah, there's funny things, I mean, it's money for criminals, it's money laundering. It's the highest energy consumer of the world, but it's dirty energy, and there's quantum threat, and there's so many things going around, and we can elaborate on all of them, and none of them is really true. But maybe the energy consumption we can talk about. Energy today, 2/3 of the energy being used by the miners to create new blocks, to find new blocks, is coming from renewable sources or from stranded energy. Renewable sources, wind energy, solar energy, water, turbines. And stranded energy is very interesting because this comes more into the play. They're putting miners there where there's excess energy. For example, a wind farm, in the night generates a lot of energy, but nobody needs energy in the night. People are, there's no industry. So you put a miner there absorbing that excess energy. Same with, solar farms, same with oil rigs, with the flare gas. You see oil rigs,
Yes.
you see all this flame burning the whole time, which is excess gas which you don't use. Bitcoin can use that, So there's many ways of using already available energy in this world to convert it into Bitcoin. That's a smart way of doing mining.
So it's energy. Bitcoin is energy.
It's condensed energy, correct?
Interesting. So looking up to 5 to 10 years ahead, what does success actually look like? What needs to happen, or what needs to happen, or what can I say? What needs to happen to say for you to say like we're on the right track right now?
Yeah, I mean, what we are doing needs to happen more.
Okay.
Yeah, education, motivating everybody to ask the right questions, building conviction. Yeah, building Bitcoin knowledge, building a strong foundation what Bitcoin really means. And Bitcoin can be discussed in so many ways. It can be discussed from a monetary point of view. It can be discussed from a society point of view, from a technology point of view, from an energy point of view. Many different facets of Bitcoin can be discussed and needs to be discussed in order to build proper conviction. So there is more to do on that side. Definitely motivating, friends to go to Bitcoin meetups. Maybe set up a Bitcoin meetup, a monthly group where you discuss around the different interesting questions. And as well, you need more market participants, meaning easier way to access Bitcoin, education in terms of how to handle Bitcoin. What's a wallet, what's a private key, what's a public key, how to transfer Bitcoin, how to put it in self-custody, how to keep Bitcoin safe, because it will be the most pristine and most valuable thing you're holding on to,
Yes.
It's, and monetary education in total, to understand how this monetary world functions. Also, it's not only the private people which need to come on, it's more like also sort of institutional money, which sort of family office especially, understanding the pristine properties of Bitcoin to make Bitcoin go broader. And I believe the price itself is a marketing tool, because it's like a marketing thing, when the price goes up, more people follow.
Yes.
When more people follow, price goes more up. And it's like a network effect,
Yes.
which we need to create more. We're in an early phase of a network effect today, I would say. So, but the moment the network effect is kicking in, it can go very, very fast, very parabolic. And I think this is the main thing that needs to happen. Yeah.
Any books or things that you can recommend?
Yeah, I have brought one very important book. It's the Bitcoin Standard, of course, from Seyfedin Namouz. And there's more. There's Broken Money from Lynn Alden, and there is Jeff Booth, very, very famous author as well, The Price of Tomorrow. So those three books I would recommend to read, and because a lot of those questions which might come up during this conversation probably will be solved by reading those books. I can also ask AI, what I sometimes do if I don't have time to read all the books, do me an excerpt, do me like a summary of this book in 20 pages or in 30 pages. So you don't have to read 300 pages.
That's the benefit of AI.
Yeah.
So what's the one thing about Bitcoin, whether it's property, whether it's history, that you wish more people truly paid attention to?
The one thing.
The one thing.
Understanding that Bitcoin is freedom money.
Yes.
It's the most important thing, yeah.
Yes. I'd like you to end with one last question. So if you can use 3 words to describe Bitcoin, what would they be?
Sorry, say it again.
If you could use 3 words to describe Bitcoin, what would they be?
Bitcoin is freedom.
Thank you to have you today. Thank you so much.
You're welcome.
Sorry. Thank you so much. We love
Thank you, brother.
Thank you for making it far through this episode. Every episode we are joined by financial aspects. If you want exclusive insight from these financial aspects, subscribe to our channel or join our community for free giveaways.